Hello and welcome to the Global View on this Tuesday. We're taking a look at what's going on at a macro level. The next key event for markets is this week's consumer prices report out of the States. That's ahead of the Fed meeting later this month, with a rate pause priced in for September. A majority of bond strategists say the benchmark US 10-year Treasury note yield has peaked in the current cycle. That's according to a Reuters poll. The median forecast for the 10-year note yield is 3.9% by the end of November. It's currently sitting just over 4.25%. The 2-year yield there unchanged at 4.98%. The US dollar has weakened against most major currencies as the British pound continued its recovery from last week's 3-month low and the euro strengthened. The yen surged following comments from Bank of Japan Governor Ueda on the possibility that Japan could begin moving away from its era of negative interest rates. The Aussie dollar has rallied to be trading at 64.3 US cents. And the European Commission has forecast that the Eurozone economy will grow slower than previously expected this year and next as consumer demand suffers from high inflation and the biggest economy, Germany, slips into recession. GDP growth forecast to be at 0.8% this year and 1.3% for 2024. US Treasury Secretary Janet Yellen has said she's increasingly confident the US will be able to contain inflation without major damage to the job market, hailing data showing a steady slowdown in inflation and a fresh influx of job seekers, saying, "I am feeling very good about that prediction." And she said when asked about her previous hopes that the US would avoid a recession while still reining in consumer price gains. Well, to catch up with the latest results, we've had Oracle out overnight. More broadly, what's going on in the semiconductor space. I caught up with Angelo Zino from CFRA Research.
For the most part, the actual quarter came in relatively in line. I mean, revenue grew about 9%. Earnings of about $1.19 was also slightly above our expectations. But to your point, it was all about that guidance, and that's really where the stock took another leg down after hours. And at the end of the day, this was a company that's now looking, I think, about 3 to 5% revenue growth in terms of constant currency, about 5 to 7% growth when kind of adjusted to US dollar. And that's kind of well below where the street was looking at, about 8.5% growth here for the November quarter. So that's really where the disappointment came from. There was definitely a lot of excitement kind of going into the quarter here. Stock up north of 50% year to date, over 60% over the last 12 months. So this is an environment where you really can't miss or even slightly miss if you're kind of all about that AI story, and that's what is happening here with Oracle's quarter.
What is it also just looking at that uncertain economic outlook, Angelo, as far as perhaps what the customers are likely to be willing to spend on cloud services?
Yeah, I mean, listen, as far as the cloud number was concerned for the quarter, it grew about 30% year over year, which was really in line with expectations. Now about 30% of their total revenue. That's when you kind of look at both their infrastructure cloud business as well as their software as a service cloud business. So as far as the quarter, again, concerned, relatively okay. They didn't necessarily say, the outlook kind of looking ahead is that the cloud business should continue to grow at a fairly consistent pace here as we kind of look out over the next 6 to 8 quarters. And that's a good thing because now cloud is a bigger percentage of their business. So it's continuing to grow at very high levels as that piece of the pie gets bigger, should result in some significant scale potential. But that being said, I mean, listen, you've got their legacy licensing business, which generates gross margins north of 90%. And the cloud business is going to kind of somewhat deteriorate that kind of favorable margin mix out there. So when we kind of look ahead here, I'd say very good growth potential on the infrastructure side of things. They did note some very strong kind of customer wins over the last 3 months. I think about $4 billion of signed contracts for AI training capacity. So they are clearly seeing some nice momentum on the cloud side of things. I think that maybe the hope was maybe the growth rate would have been faster than other people would have anticipated, and that's not necessarily what's happening.
And Angelo, how well placed is Oracle for AI development? I guess compared, for instance, with what we're seeing from Amazon, Alphabet, and Microsoft?
Yeah, so you kind of look at Oracle, and they're a very small player, right? And kind of when you kind of look at relative to those names out there in terms of the cloud infrastructure space, let's call it maybe they have 2% of share out there in the market. So this is a company that, at least when you're looking specifically at the cloud infrastructure business, should continue to grow well above those names that you highlighted out there. But again, you're talking about inferior market share out there, and clearly from the scale potential, they've got some work to do going forward. I'd also say it's a very capital intensive business in terms of kind of ramping up on the cloud side of things. So when you kind of look at this company specifically at their kind of debt obligations, this is not a company like many other tech companies out there, which have a great balance sheet with a huge net cash position. They've actually got a net debt position of about 76, 77 billion out there. So it becomes, when you kind of look at the story, looking at that heavy net debt position, the capital intensity of the business, there's still kind of, in our view, some work to be desired on that side of things. And we have seen the multiple really expand for Oracle here over the last couple of quarters. So I think, as much as the growth outlook for the long term is likely improved for Oracle, I think you have to digest some of those gains that we've seen here over the last couple of quarters.
Angelo, let's move to what is happening on the semiconductor front, in particular with the latest development from Huawei and the impact that's having, I guess, potentially politically too, in terms of possible restrictions.
Yeah, so as far as kind of the Huawei 60 Pro Mate is concerned, listen, it is there's definitely some concern out there from the U.S. administration that about how Huawei, specifically with their kind of foundry partner out there, SMI, was able to kind of create such an unbelievable device relative to what they have accessible to them in terms of the access to U.S. chips, as well as more importantly, U.S. equipment out there. So, clearly there is going to kind of be a review done here, we think, by the U.S. in terms of whether or not there should be kind of greater scrutiny or more sanctions placed on U.S. chips and also equipment sold into China. So we would expect to see more clarity and likely kind of more sanctions placed on this chip space into China here over the next couple of months, but we have to wait and see on that side of things.
Okay, so possibility there, the more restrictions are coming. What's the likely flow and effect then? I guess particularly as far as those companies with operating with smartphones and the impact it's going to have in that space.
Yeah, I mean, listen, when you kind of look specifically at some of the smartphone providers out there, the connectivity plays, the Qualcomms, Qorvos, Skyworks of the world, clearly they have a lot of, they're essentially smartphone plays. They do have some exposure, on the other side of things, on the infrastructure side, obviously, but they're really kind of smartphone plays out there. And I think the concern is potentially you see more sanctions between Huawei and SMI. And I'd say for the most part, most of these companies don't have a lot of exposure directly into Huawei at this point in time, or at least from what we know of. But that said, there could potentially be fear that maybe this ends up being more broad in nature into other Android-based companies out there. When you kind of think outside of Samsung, really the biggest players out there on the Android side of things are all based out in China. So definitely some concern out there if this thing were to kind of spread. So yeah.
And just on that point of talking smartphones and Apple, Angelo, are you across that as to those reports out of China that those working in central government offices no longer be able to use Apple devices? So we did see a reaction in the share price as a result. Do we have greater clarity as to what's going on there?
Yeah, listen, I think as far as kind of, some of the restrictions placed in what type of, who can actually purchase iPhones going forward. I mean, clearly there are going to be restrictions from employees on a government basis and now on a statewide basis, it seems like, from statewide firms that won't be able to bring their iPhone devices into the office at this point in time. Now, that said, It's probably, if it has any impact at all to Apple, it is likely to be very minor in nature. We don't at some point in time see some sort of full-blown ban of Apple into China because of the importance they have on the China supply chain out there, and the relationships they have remain very favorable with the Chinese government in our view. So, and when you kind of couple that with their high quality brand to the consumer out there, so even in China, again, we see very little risk of a full out ban, but it will be a headwind to an extent. There could potentially be some switchers going away from iOS to Android, and especially more importantly, what we think is if Huawei were to kind of come back in a strong way inside of China with that made in China brand out there, it has the potential to maybe cause Apple to lose some share to Huawei. Huawei was really kind of the only game in town outside of Apple at the high end of the market. Apple has about 2/3 of the share in the high-end smartphone market in China. So there is potential for Huawei to kind of start taking some share over time in that market. But over the next 12 to 18 months, we actually see very little lost revenue potential for Apple.
Angelo Zino from CFRA Research. All right, a check of the market. We are expecting a higher open when we get going. As you can see, SPY futures up close to 0.1%. And just a reminder of our next virtual event for the investors, particularly in gold, for the bugs or the bears. It's this Thursday at 11 a.m. Eastern, and we'll debate what the future holds for gold and get key stock picks from gold investors. Registration gets you entry to watch live or on demand. So go for gold, register today, ausbiz.co/gold rush. That is the global view. We'll stay with us. The open is just around the corner.